Hello, good morning everyone. Hope you're well. Thank you for joining the webinar today, where we want to share with you our new underwriting criteria enhancements. I'm Lyndsey Charnock, National Sales Manager for Retirement, and also talking us through the enhancements today is our Senior Underwriter, Paul O'Hara. So today we're just wanting to cover our underwriting approach. Just want to talk you through the team of the underwriters that we have here at Canada Life. Paul will then talk us through the changes to our underwriting criteria, and then we'll also have time at the end to go through any questions and answers. If you have got any questions as we go through, please use the Q&A box on the left-hand side and we'll have time to pick these up at the end. Thank you. So as a lot of you may already know at Canada Life, we have flexible underwriting approach to try and help more customers achieve their retirement goals, to help you as advisors open more doors for your clients' retirement plans. Our experienced underwriters are always available to discuss complex cases and provide expert support when you need it. You can reach out to them directly, either on the 0800 number on screen, or alternatively, you can email them at hf-underwriting@canadalife.co.uk. So looking at our team of underwriters, so I am sure a lot of you as advisors have spoken to many of the team previously. We've got Paul O'Hara, who is our Senior Underwriting Manager, who you'll hear from next to take you through the changes. And then we've got 7 other highly experienced underwriters with deep expertise, not only in underwriting, but in conveyancing as well. And as I said, they're here to provide that extra support to tailored solutions when you need them the most. So I'll hand over to Paul now, who can talk through the enhancements, and then, as I said, we will have a little bit of time at the end to go through any of your questions. Thank you. Over to you, Paul.
Thanks, Lyndsey. Morning, everyone. We'd like to expand our underwriting criteria. We've been looking at quite a few changes of where we can improve. As Lyndsey said earlier, we're very flexible, as probably a lot of you will know, as a company. So I'd like to take you through some of the changes that we're looking at doing. So we're looking to improve a construction for cob, wattle and daub. We're now going to introduce that into our lending criteria. Thatch roofs, we're going to now put these types of properties are now going to come as a new criteria as well. We're now going to also change our criteria on flying freeholds and also enhance our criteria on service charges and also tweak our land acreage that we used to take into account. So I'll take you through each one step by step and give you a little overview of what we've looked at and some of the rules that are going to relate to each one. First one we're going to go through will be cob, wattle and daub construction. We currently limit our exposure to any materials on timber frame properties built pre-1900. However, cob, wattle and daub is well-known, well-proven methods of construction with minimal risk of dilapidation over long term, but long as the property's been well maintained and looked after by the clients. We propose to accept this property with cob, wattle and daub construction without any date restrictions. However, this will be subject to the property being good condition with no essential works required, and we won't allow any retentions to be held for any works for the properties to be completed. If a valuation is completed with this, then we would pen the application or stop it until the works have been completed and a satisfactory re-inspection has been completed on the case. Regards to the walls need to be a thickness at least 121 millimeters, and there must be no concerns from the surveyor over the construction or future saleability. We're looking to make sure this property is well maintained, in good order, and then we'll have no problems over lending over this construction without the date restrictions as advised earlier. Okay, moving on. This is something we've always looked to try and include into our lending criteria. Now had the chance to do so. As you can see, English Heritage have stated over 60,000 properties with thatch roofs across Great Britain. Thatch roofs materials are aesthetically pleasing, environmentally friendly, and good sound and thermal insulation would be appealing to properties in the market. There obviously is a market for this, and we do see quite a few general inquiries coming through to the team asking if we will lend on this. Pleased to say we've now got this approved to include into our lending policy, and it'll be subject to all insurance terms meeting our minimum standard lending criteria as present. And secondly, the surveyor must confirm the property is in good order, the roof is in good order, the age of the roof, and the existence of terms and guarantees if it has any, and this will be subject to no essential repairs and no retentions allowed due to the uniqueness style of the property and the potential cost that involved for maintaining. We'd like to lend on these properties in a good order from the outset, showing that they've been well maintained by the clients. Okay, moving on to flying freeholds. This is something that in the industry is well known to be around 15% potentially, as our current criteria is with residential lending and equity release providers. We're looking to enhance this and increase it to 25%. Flying freehold is a legal term used to describe a situation where part of one property is built over another or under another property with no legal ownership connection between the two properties. Property does need to be mid-air to be flying freehold. Percentage limits refers to proportion of the floor area of the property taken up by the flying freehold element. We're proposing to accept up to the 25% flying freehold, subject to conveyancing partners ensuring the necessary covenants are in place for maintenance and repair, and the surveyor to confirm marketability and saleability is not affected by the extent of the flying freehold. Just another thing we can add to our flexible underwriting criteria, which is not out there in the market as such at the moment. Okay, moving on. Another enhancement that we've been really happy to do is increase our service charge percentages from 1.5% to 2.5%. We currently apply a combined limit of service charge and ground rent together of 0.75 to 1.5%. Service charges and ground rent. The maximum annual ground rent we can consider is £250 per annum and London £1,000 per annum, which sits inside our current criteria as present. Whilst we plan to maintain our existing caps on ground rents, we propose to increase the maximum combined service charge ground rent to 2.5%, subject to criteria if the service charge is between 1.5% and 2.5%. This is the case when we are underwriting it. We will pen the application and come back to the advisor and confirm that we require written confirmation from the freeholder management company that no major works are planned on the development. We'd also require last 3 years service charge statements for the subject property to confirm no major increases. We'd also be looking to seek whether there's a 1% maximum saleback clause within the lease and also a 1% maximum sinking fund if applicable. We'd also require confirmation from the surveyor that saleability is not rated as poor based on the percentage of service charge that's been proposed. This is a very unique attribute we can add to our underwriting criteria and should be very popular within the industry based on the fact that inflation costs, additions to service charges for utilities that are being added these days. So hopefully this will assist in getting more cases across the line for advisors. Okay, and moving on to unlimited acreage. We're currently valuing properties with up to 5 acres of land and included in our valuation, but charging all of the land within our security at present. We're proposing now to accept properties with unlimited acreage and full charge and value taken over the land. Very happy to introduce this one again. This would be help with everyone to boost what their lending limits can be, taking into account all the attributes of the land into account. This would be, though, subject to a few clauses that we need to adhere to, which would be no commercial usage at the property, no agricultural restrictions, uses or classes of small holding, adequate saleability under normal market conditions, no additional licenses or contracts, must be for sole personal use only. We'd need to do legal review of any titles, confirming no covenants or restrictions on the titles. And all will be subject to valuation with regards to the valuer's opinion of the land and future marketability and saleability under standard market terms. Thank you for listening. I'm going to move this back over to Lyndsey.
Brilliant. Thanks, Paul. Some great changes there that will really help advisors support more clients with definitely a wider range of property types. So thanks all. I think we've got time for a couple of questions and answers. So I'll just have a quick look. So we've got one here, Paul, on agricultural use. So advisor saying, what if the client has 4 horses for personal use only? Will this be deemed acceptable?
Thanks, Lyndsey. Yeah, we will be flexible with what's used on the land. Like we said earlier, there can be no commercial activity on the land at all, or full agricultural use. However, a small percentage of horses for personal use only would be deemed acceptable, subject to the valuer going out and checking the situation at the property at the time. We'd also allow, for instance, maybe a handful of chickens on the land, which is just, again, for home use. Small amounts of animals on the land, subject to case review by us. Overall, though, we wouldn't allow horses to be used for people renting out their horses on the land or used for training them for future purposes. It has to be sole use for the individual clients only.
Yeah, that makes sense. Brilliant. Thanks, Paul. Second one here is one regarding service charges. So with service charges, what types of things would we consider as major works?
Yep, thanks again, Lyndsey. When it comes to assessment of the service charges, we are looking for, when we have the 3 years accounts, for any major increases over that 3-year period that potentially could cause concerns over future saleability of that property. And again, where this comes into play, if you have a property that's got major works, i.e. structural problems with the security, huge amount of maintenance being completed throughout the inside and outside of the block, totaling 50 to 100,000 pounds. We'd have to monitor this against the size of the block also. So it depended if there was 4 flats within the block, or it could be a block of 40. If you've got a large pot of money being used to maintain this, then you're going to be looking at potentially high service charges being increased over the following years based on the amount of money that's got to be put into the property. We will look at these on a case by case and assess what we feel is adequate to underwrite, and we'd also revert to our valuer to see if this would impact on the future saleability of the property. Small maintenance considerations would be deemed acceptable, and small increase on the pot of maintenance between the leaseholders would be sufficient.
That's great. Thank you very much, Paul. I think that's it, guys. But any other questions, we will come back to you directly. So please feel free to, as I said, use the Q&A box on the left-hand side, and we can pick up with you all individually. Also, in the resources tab on the left-hand side, you can download a copy of the slides, so they can be there to obviously help you for future reference. There's also a link in there to the sales team, so that'll link you through to all the contact details for the sales team that are there to help and support you as well. And obviously, any questions, just come back to us. But again, thank you very much for your time, much appreciated, and we'll look forward to speaking to you all soon. Thank you.
Thanks, everyone.